Okay, good evening. It's good to have us here for this session tonight. We will be taking international economic relation, and basically the facilitator will be taking us on balance of payment. Okay, so stay tuned and let's engage to learn more, and also let's encourage the knowledge sharing session. All right, so over to you, facilitator.
Okay, yes, good evening, everyone. Can you hear me?
You're audible. We can hear you.
Okay, all right, thank you so much. Okay, yes, the course is International Economics Relations, and the last time we discussed about, I think we've touched based with the theories of international trade. We've touched base with capital movements, international capital movements, and why you know countries will want to invest in another country, as in what will make, what will entice, or what are those readily available material that would encourage a country or an individual of a country to invest in another country. And we also we those reason, then yes, we made mention of reasons for capital movements. And capital movements, they are into two. We have the FDI and the FPI, and we're able to differentiate between FDI, which is the foreign direct investment, and the other one, which is foreign portfolio investments. And I was able to say that, okay, uh, foreign direct investment, that one has to do with, now we want to talk about the difference. That is, you own that asset. You can decide to, uh, buy the asset. Maybe maybe one company has liquidated, so, and you feel that, okay, let me just buy the company. So you can, put in your capital through that. It's either you buy that asset, and you have you gain ownership. But like FPI, that one is whereby a citizen or an individual buys a share from that company. So it is not owned by the that individual directly. It just has a share from uh, that company, by inputting his own capital. So, and we also made mention that whenever there is crisis, it is not always easy for the investors in FDI to just move, because they own that property. Unlike FPI, that is why the money they are bringing in, it is hot money. So whenever there is crisis, they can easily pull out. So those are just differences between FDI and FPI. And we also talked about reason why an investor
Have
would
to
want to.
get this clarification. Okay, so there is FDI and there's also, is it FDI or FBI?
Yes, those are the two ways in which capital flows, international capital movement.
Okay, so can I get the full meaning? Foreign direct investments and also?
Foreign portfolio investment. I better start this now with my Tito.
Okay, okay. So because again, when we say FPI, FDI, yes, one could mix it up based on how it sounds. Okay, might be thinking they are the same thing. So that was why I asked that question. So I know one has to do with just basically investments, which can be easily, or what's it called, can encourage capital flights. And I know There's another one that looks like it's more, what's it called, soluble, in the sense that you can't convert it to cash easily, per se. So yeah, all right, thanks. You can go ahead.
Okay, and what other thing that do I want to say? Foreign direct investment and foreign portfolio investment. So those are the two ways in which capital, moves. But tonight we'll be talking about BOP, balance of payment. And before that, I also mentioned reasons for capital movement. Then, those uh, factors, those determinants that, those readily available market that will make an investor want to, put in his capital. When you look at the trade policy, when you are looking at, okay, the tariff, if you look at the market structure, if you look at the market size and all that, okay, and they have good roads, they have there's accessibility to good roads, there's accessibility to, market. So all those things are what will make, an investor consider investing. Then I could remember in the class, they also made mention that, okay, this FDI, it has advantages and it also has disadvantage, you understand? So, for example, now let me, though we are supposed to take BOP, but let me just uh, digress a bit. Why or capital movement is important, or the reason for capital movement. So if a foreign company, now let's say Japan or China, if they see that yes, in Nigeria they have this raw material and they intend producing, sugar, and they see that we have enough sugar cane here, you understand? So they can decide to, put in their capital, you understand, maybe by building a sugar plant or something here. And when they also see that yes, what we want to produce, we have people that can buy what we want to produce, they have money, they are not suffering. So be considering the per capita income of the individual in that country. So if they see it is high, so that means what we are bringing they can buy, let's invest. Then if they see that there is cheap labor, you understand, compared to the wages they are going to pay, if they see that it is very small, they also want to come and, invest. So many reasons why capital uh, moves. And if you see that there is war in this country, you just have to move your capital. If you see that Nigeria is not safe, you can always move uh, the capital and invest in maybe Togo or Sierra Leone. So it has so many advantages too, in which the country they are investing in, at least, there will be employment. I could remember when MTN came, there was so many customer service role, and you can't. Then when it comes to the wages, what the domestic producer will be paying will not be as much as what the foreign company will be paying. So, and as a country, you also generate revenue from there. So it's just so basically I'm just trying to go back, and it also has the effect on, we're talking about it also has disadvantage. And the disadvantage now is that when we talked about the per capita income the other time, at least they have that money. They can actually purchase what we want to produce. So now in that country, it might, yeah, the savings might reduce because they will just be spending. They will spend more than what they are saving. And you see, when foreign investors are coming, it's not that they are really coming to do the domestic producer good as such. They are coming to find a way to displace that domestic producer. So that is part of the disadvantage, and it could also lead to unemployment. When they are coming, they have this technology and all that. So it will just get to a stage, everything will be automated. So there's no need for any human power. So since the machine can just do everything, and that could lead to loss of job. So so let's go to balance of payment. Are we together?
Yes.
We are together. Sure, sure.
Okay, yes, balance of payment now. It has to do with, if you hear lending, borrowing, export of goods and services, import of goods and services, buying of assets, selling of assets that took place. Everything that has to do with monetary transaction, international monetary transaction, international financial transaction. That is what balance of payments captures. So it records the international trade, the financial transactions, made by countries resident. And so you can define it in several ways. You can say, okay, balance of payments is an accounting of a country's international transaction for a particular time. Are we together? Nobody is saying anything.
Yes, so
Sorry.
yes, we are with you.
Okay, so
Please come again. You said the balance of payments is an account of the country's something.
I said is an accounting of a country's international transaction. Financial transaction, international trade. At first, I said is the record of all international trade
I
and
wanted to
financial
say
transactions.
the record rather than accounting.
You said?
So I wanted to say it should be the record rather than accounting or financial transaction.
Yes, you can. Of course, you can say it's an accounting of a country's international transactions.
Oh,
Yes.
okay. Because when you say accounting, yeah, you can take it through a different route in explaining that. But yes, I understand. Yes, it's the record. Because yes, it will still come to record the credit and debit side. But saying accounting, I think that is a broader perspective.
Okay. You can also say is the record of international trade and financial transaction, or
Yes.
international monetary transaction.
Yeah. Okay, so is that cool, baby?
Yeah, I'm trying to jot it down. You said is a record of international trade or monetary transaction,
And
right?
financial transactions made by a country's resident. It
Oh,
has
okay.
different definition.
Okay. Thank you.
Hello?
Yes?
Okay, because we're not hearing you again, so
Myself or the
No,
person that just
look
asked?
at the network.
So,
Okay, so I
you know,
want to
the other
start
time I
from
said
this.
BOP has to do with, so what are those financial transactions? What are those international trade? So we're talking about the uh, the export of goods, the import of goods, the FDI, talking about the FPI, talking about investment, talking about income, talking about loan. All these things are being captured in the balance of payment. So any transaction that causes, you know, money to flow in, money to flow out, it is recorded in the BOP. Purchase of asset, sales of asset, it is recorded in the BOP. And the way BOP is being reported is it is reported for a quarter, or let's say a year.
You're following.
Okay, so BOP, you know, it helps us to know those transactions that happens between, you know, individuals, businesses, and, you know, government agencies in the country with the rest of the world. Borrowing, lending, and all that. So tonight we'll be looking at two components of the balance of payment. We have current account, which is the same thing as the merchandise account, and we have can someone remind me the second one? I know the other one too is C, which is capital account. There should be three. There's another one, financial account, but it touched base with two: capital account and then current account. Are we together? So
Yes,
what
we're
he did
together.
was,
Current capital account.
yes, current and then capital account. But under that current account, it captures import of goods, export of goods, those income you receive on interest, you know, dividend, and unilateral transfers. So all these ones I will explain one after the other. So at least we'll get it very well. So, you know, when we're talking about goods, it could be raw material, it could be manufactured goods, like car, like computers and all that. So services in terms of tourism, transportation, and all that. Then, you know, transfers now from grants, from aids, you know, and Nigerians too, we do give other countries, we do give them aids, and then, you know, China too do give us aids. So if we want to categorize all these under current account, we'll be looking at now. I think he used visible and invisible. Visible are what you can see, then invisible, what you can see. Visible, which is goods, and invisible, such as the tourism, transportation, you know, all those kind of business services are captured under current account. So if you now want to, you know, in the balance sheet, if you want to place that out, I will call some, I don't know if you have pen there. We'll just do some little exercise now, and you'll be able to get where I'm driving at. Coming, 1 minute. And we'll be looking at the debit side. Now, if a country in the current account now, if that country receive money, it will be recorded under credit. But if that country pays,
not under credit.
pardon?
You meant if the country receives money, it should be recorded
Yes,
in the credit side, not under credit.
yes.
When you put that credit, that means as a loan.
No, I'm not. You said what? No, no. What I'm saying is, if a country receive money, I want to try and bring about if when a BOP is at deficit and when it is as surplus. But let me let me not go that route. Thank you. Let me start this way. Now, if you have, let me use import and export. If a country is exporting out, it will be recorded under credit. Are we together?
Sorry, do you mean credit side?
Yes, as in the receipt, when you are using receipt and payment.
So that was what I meant. You use credit side or debit side. So you not under credit.
Okay, credit side. Thank you so much. That's why we are together now. So export of goods will be on credit side. Export of services will be on service side. So, the interest that you were able to gain, it will be on credit side. As we are talking about receipts now, but anything that has to do with payment that you are the one giving, making that payment, it will be recorded on that debit side, on that current account. So if our payment, if it is more than our receipt, then you can say there is what? Deficit. But whenever the credit, that is what we receive, is higher than our payment, then we can say there is surplus. I'll repeat. Under our current account, it has to do with, it captures goods, import and export of goods. It captures import and export of services. It captures income from foreign investment, and it captures unilateral transfers. So, which is grants and aid. So, if you now, that grant and aid, you can give, you can also receive. So I now said export, which will be recorded. What did you use there, Abdulrazak?
Credit side.
Credit side.
Credit.
Side, you use side. So
Yes.
export of good will be at credit side. Export of service will be at credit side. The income that you got, as in the interest that you got from what you invested on, it will be as receipt. But if you are paying that interest to another country, then it will be recorded on the payment side, which is the debit side. So if you are giving out aids and grants, it will be recorded on the payment side, the debit side. But if you are receiving that grant and aid from another country, then you are the receiving end, then it will be what? By the credit side. Are we together? Now, from the I don't have the way I used to write. I don't understand. So I don't know if we get that. So if the amount we have on the debit side, if it is high, that is, if the amount we have on the payment side, if it is more than the amount we have on the receipt, side, then there is deficit. But if the amount at the receipt, which is at the credit side, if it is more than the payment side, then we say there is surplus. So the value, it is better in the current account if the value of the credit entries exceed the debit. Of course, there will be a surplus. And if it happens to be the other way around, that is the payment or the debit side being more than the credit or the receipt side, then there is deficit. So let's take this together. Are we together?
Yes.
Yes, we are.
Okay, do you have pen there? Do we have pen there? Do we
Yes,
all have
please.
pen?
Hold on. Yes. We have our pen. Oh.
Can we start? Okay. I want us to arrange this. I want you to put on the credit side and on the payment side. Okay. So your table, unilateral payments, write it down. You will now fix it together. Unilateral payment, 300. Are we writing it? How many participants do we have? I'm not even checking that.
Let's go on.
Okay, we have 8. We have 8. So do you have our pen there? Now let's start. I want us to arrange this together so you get my point. Unilateral payment, 300. Export of goods, 900. I'll just be calling 8 items. So I want you to put it under credit, and I also want you to put it on credit side and put on payment side. So anything we add together, we'll now look at it if at this if there is a deficit or if there is a surplus. We are still looking at current account. Don't forget that I said credit side, we always captures those things that you receive. So if you are talking about interest, if you are talking about dividend, it is what you receive. If that country, if you receive from other country, it will be on the receipt side. But if you are the one paying to another country, it will be on the payment side, which is the debit side. Now, unilateral payment, 300. Export of goods, 900. Import of services, 500. Income that you receive, maybe on interest on dividend, 500. Unilateral receipt, that is those grades, those grants, those aid that you receive, 300. Import of service, 500. Interest that you pay to another country, foreign income from investment at home, 400. Is it up to 8?
Yeah.
Seven.
Hello, Ramata. Please, can you start over?
Yes, I'm continuing.
As in these items, I kind of missed.
Okay,
Some
maybe I shouldn't put figure. Let me not put figure now.
No, it's fine. It's fine. You can go ahead like that. It's fine. So we don't stress. You can go ahead. It's just that I missed part.
Okay, now let me start all over.
Thank you.
Unilateral payment, 300. Draw your table, credit side, payment side, credit side, debit side. Or credit could also mean receipt, what you received. Then debit, which is also payment side for current account, because in the capital account, it changes. So unilateral payment, 300. Export of goods, 900. Maybe you write it out before placing it at the appropriate quarters. Unilateral payment, 300. Export of goods, 900. Investment that you paid another as income that you paid.
Alaji. Razak, export of goods is under credit.
No, I don't see anything now. Why is Alaji even sharing his screen? Let us know if we are right. Alaji, don't share the screen. That's why I said if we are with our pen, let us know. I just want us to know that okay, these are placed under credit, these are placed under.
Thank you.
So these are placed under credit, these are placed under debit. Okay, fine. Now, if we now look at the total amount on that debit side and the total amount on that credit side, then we'll be able to say if that current account is actually on deficit or surplus. That is where I'm going. Don't write it. So unilateral payments, 300. Export of goods, 900. The interest that you pay to another country, 400. Export of services, 350. Unilateral receipt, 300. Imports of goods, 1,000. Export of service, 350. Import of service, 500. Do we have 8 items there?
I did not get it though.
Who is not getting it?
Me, you said unilateral payment is 300, export of goods 900. Then you not say interest of something that you did not say before.
Okay, I said, when we are talking about income under current account, the income could be from interest, it could be from dividend. So if you receive that interest, if your country receive that interest, it will be record. It will be on the receipt side, which is on the credit side. But if you are the one paying that interest to another country, then it will be on the payment side. That one is just expo. Do you get it? So do we have 8 items there? Export of goods, import of goods, import of service, export of service, the income you're paying, the income you received, then the grants you paid and the grants you received. Have you captured this? Unilateral transfers are under unilateral transfer could be in form of grants, it could be in form of aids. So do we have the 8 items there?
My own is 7.
Which one do you have?
I have unilateral payments, I have export of goods, I have import of services, income received, unilateral received, import of services, and interest paid to other countries. Those are what I have.
Do you have export of goods?
Yes, the second one is export of goods.
You have import of goods?
I have import of services.
Do you have import of goods?
Okay, so I have...
No, I don't have import of goods.
Import of goods, 1,000. Okay, let me get your own.
Okay, so I think I have 9 items.
Should be 8.
I have unilateral payment, services, export of services, grant paid, grant received, import of services, import of
under unilateral, it is on the, now get it right. Unilateral transfers, which could be in form of grant or aid. So if you are receiving, it will be unilateral receipts. If you are the one paying, it will be, if you are the one giving another country grants and aid, it will be unilateral payment.
Okay, so it's inside the question, unilateral payment.
Yes. So
right.
do you have 8 now? You have 8. Right? So what I want you to do for me now is put those 8 items, separate them. Let one be on the credit side. Let the other one be on the debit side. Total it and let us see which one is higher than the other. Then we'll do capital account transaction. From there, we'll call it a day.
Okay, so unilateral payment is 300 now. Export of goods
is 900.
900.
Export of service is 350.
Then which one is this interest? Yes,
that
I
is
got that
income.
one.
Yes, income. That is income. It
That's
they use
interest
income,
now.
but it is yes. It could be from interest. It could be from dividend. 500.
What's the number of that one? 500. Okay, and you have
now that interest. Is it the one you receive or the one you are paying to another country?
Are they two?
Yes, now. You will receive. You will give out.
Okay, interest received is on credit side.
I don't know, but I know that the one. But I know that the interest that you receive is 500. The interest that you paid out is 400.
Boju. Oh no, where did they sing that?
Oh yeah, So let me leave us and get the calculation. It's not really calculation per se. I just want us to get, how we are going to arrange those items, those ones that falls to the credit side and those ones that fall to the debit side. And when you now see that the amount in the credit side is actually higher than the debit side, then we'll know that what happened, is it a surplus or a deficit before we now move to capital. Because in capital account, the surplus that you have in the capital account, that is what is used to clear the deficit in the current account. So it is one after the other. So we need to first do this one. Let us get those items and how it is being recorded, because in the capital account,
So this
what you see as under credit side will be placed under debit side in capital account. Because if you are lending, it will not be recorded under credit in capital account, it will be recorded under debit. So let's do this one first. So we'll get it. After we've gotten that one, we've gotten the second one. Shike, now we are done with balance of payment.
Okay, well,
so we have 5 minutes
what's
for
the
that.
grant paid? Grant paid is what? How much?
Unilateral, they are called unilateral transfers. Like donations, like grant, like aid.
You said, I know. No, I know, but you
said
it's two now.
I said there's unilateral receipt.
Paid or
yes, unilateral receipt or unilateral. You're breaking.
300. Like
unilateral receipt is 300. Unilateral payment too is 300.
Okay. I know.
Is it only that is there? Abdulrazak.
Hello.
Have you captured it? Do your own too now. We are all students.
I thought you are giving them solution now.
I didn't give anybody solution. I even want them to put it under credit and debit side. Let's see first.
Okay, so do me a favor, please. I want to quickly project this on laptop, so I will do my own on the screen now. So
yes, okay, it's fine. So people will not even get it better. Okay, but at least let us see their. Okay. We also have Esther. We have Oluwatoyin. Nkechi.
Okay.
Rita.
I think my debit is bigger than my credit. I don't know.
That's you now. Did you capture it well? What are the figures that you got? What do you have on the credit side, on the receipt side?
Credit, 2-3. Debit side 2-6, credit side 2-3.
Then you didn't get the figures that I called.
Yeah.
Yes. Oh, you've any other person?
Razak, share your own data. Let me see what you got.
Razak.
Okay, so can you just give me the item again?
Okay.
It's Ojoro.
No, he wants, as he just wants. No, Razak, no. I still want one other person. I still want another person to try. You now give us the.
Give me the list.
Yes.
I'm not plotting them or what's it called? Putting it on credit or debit. Just give me the list. Sorry.
Oh, nice one. Unilateral payment, 300.
Dollars or naira?
Naira.
Pounds.
If you like, put any few. If you like, put any. If you like,
you removed it.
don't even put naira or anything. Just even put figure. So it will not dabaru. Just put something. Let us just know. My own is just the arrangement and to know if one is higher.
Number 2.
Number 2, export of goods 900.
Three.
Unilateral receipt 300.
4.
Import of services 500.
5.
Income from foreign investment. That is the interest you received at home.
I need to explain.
500.
What are you feeling like? Hey, they have to explain.
You know he's an accountant. That's why.
I will win you on this one. If I don't win you, I will not eat tomorrow. Don't worry.
All right, number 6.
Do you have export of service there? Export of services there?
No.
Okay, 350.
Okay, hold on. Oh, yeah, okay.
Hey.
Export of services 300, right?
350.
350, okay.
Then that's interest that you paid out, foreign income from foreign investment, that interest that you paid out.
Foreign income from foreign investments.
At
Is that
home.
what you said?
Foreign income from investment at home, or you can just put interest paid.
Sorry?
Interest paid, or you put foreign income from investment at home.
I would have loved to put it in the, how do I say it? In the terms used from what's it called, the source of your text that you are using. So interest paid from local investments or
It's going to be interest paid on foreign investment.
Okay.
The question was interest from foreign investment. Then this one.
Okay. How much is it?
It's 500. It's 500.
She said 400.
400.
How many?
400.
Keep on.
So that's why it's good to display this thing at times, so we can all be on the same page.
Okay.
So
is it complete? Is it up to 8? 3, 4, 5, 6.
The 8th one now.
Please, Rahmat, maybe the two interest is 500.
You said? Yes, one is 500. The one you are paying, the one you receive is 500. The one you are paying is 400.
Okay, so
do you have that of export of goods?
The two 500.
I'm displaying it now. You can see there's export of goods.
So that means we don't have import of goods. Yes, we don't have import of goods.
We only have import of services.
You said import of goods 1,000.
1,000. 1,000. So that is it. So let's give ourselves grace of 5 minutes. So you can do it again now.
Thank you. That, thank
Let's try. So we'll add it we'll add it together and let's see if there is surplus or deficit.
Feel like say surplus there.
Okay, Abdulrazak, thank you.
I have no balance now.
And did I say anything? I said thank you. Let's make it so.
I am balanced. My battery is 8%. It will
What
soon
is,
go up.
balance?
I want to get to the end.
Are you serious?
what is 8%?
Huh? What did you say?
You said something is 8%.
I said my battery, my phone battery.
Okay.
I want us to do the correction before it goes off.
If it goes up, it's recorded so you can get it.
No. Let me just know it at once, Barry.
Debit side is more than credit side.
Oh yeah, add it together now. Rita, Nkechi, add it. Let's see. What do
Me,
you
I'm
have?
not. My
2015.
own debit is 2,000. The debit is 2,200.
Same
Credit
here
2,000.
too. 2015 naira for credit, Abi.
Yes, ma.
Then 2,200 for
No,
debit.
for debit. That's what I
For
got.
debit,
Who said that now?
yes.
Who said it? Who said that?
3 of us. Maybe we are 3, Abi. How many people are
Yes.
all 4 of us.
All of us. We are we alone. They are
Is it correct?
Yes, they are correct.
But now
Yes,
against one. Your own is not your own is.
they are correct. So in this kind of account, are we experiencing deficit or surplus?
Surplus. No, deficit because the debit side.
Wait now,
So,
talk your own now,
Deficit. No. Ask me the question now.
You
I
said
thought
your
it's
own. Let
deficit.
another person too. Is deficit, Abi?
Yes, because the debit side is more than the credit side.
By
So
150.
Yes.
So it is deficit. Okay, what's saying?
It's the same thing I said, no?
It's deficit, it's not surplus. Somebody said surplus, somebody said deficit before.
I said deficit because the debit side is bigger than credit side. That's what I said.
Do we now get it? As in, we actually went through that pain for us to get the difference between deficit and surplus, and for us to know those items that will be recorded under credit, which is the same thing as receipt. You know that it is not receipt, it is silent. The P there is silent, so it's receipt. Then the payment, which is recorded on the debit side. Are you together? So we'll now move to capital account.
Please, sorry, before we move, Biko, I'm seeing something on Razak's screen. His items, I don't know where the credit is on that tabular form. So Razak, my understanding of accounting.
You want to show?
No,
you want to show Razak?
I told him that if he beats me, I will not eat tomorrow, Saturday. So he's not going to see. Razak, I don't know, but debit is on the left hand side. Do you get? Then credit is on the right hand side. I mean, that's accounting, isn't it? So, but your table is showing otherwise.
Isn't that one to confuse us now?
Oh, it's not confusion. It's not confusing me now. I just wanted to be sure if I know that's how it's done anyway. At least I did small accounting. So is debit side share and then debit on the left, credit on the right share. Just so he's aware if it's a mistake on his part. I don't know. I'm just trying to out. You can go on. You can go on. Step more.
It's on the left.
Debit.
No, I'm asking you are saying something. I didn't get that.
I'm saying that accounting principle, right? That the debit is on the left-hand side and credit is on the right-hand side. When you're drawing a table.
Okay.
But what I'm saying is on your screen is an opposite of that principle.
Okay, so I have credits on the left, then debit on the right.
Yeah, from what I'm saying.
Oh, okay.
So where you have this, yes, sir. So where you have all this import of services, import of goods, all of them should fall on the debit side.
Oh.
Yes, then the export of goods, unilateral receipt, the other should fall on the credit side.
I see.
All right. Rahmat, if you are there, you can please continue. I should go on. Oh my God.
He's on mute.
Rahmat, if you can hear us, can you hear us?
I can hear you. He's on mute, yes.
Yeah, okay, so what's the final now? So we know.
You've answered it now. You've said that the payment side is actually more than the receipt side. So
yeah,
in this case, the deficit.
Yeah.
Had it been on that credit, we have 200. And
yeah.
on the we have 200, and on the payment side we have 220. That is 2020. Then there is surplus.
So can you make it look as okay? So like give a sentence. You were to ask in an exam to talk about your answer using economic term, and would we say that the country, the home country, is borrowing is a loss? Is that what it means? And then
you said what? You know, in economics term, there's something called short run. There is something called long run. And you know, in international trade, we mentioned mercantilism and bullionism. They were actually in support of exports and they discourage imports. And you know, international trade has to do with what? Import and you know, exportation. So in short run, if the export is higher than import, fine, it is good for us. But in the long run, we'll just, you know, it will just be export driven and not import. So, you know, we just have to find a way of balancing the two. But in this sense now, it is always the capital account that will help us to clear the transaction in the deficit in the current account. So we are still going to do the two together, and you now see how we are going to add capital and current account in those transactions in capital account and current transaction. The value must equate the transaction in the current and the capital account under the beside the credit side and that of the debit side, which when the both are being added differently must be able to give us a balanced account. That is where the BOP comes in. So in this sense now, you can say that, okay, the value of credit entries as it has exceed the debit or what do we have there? The value of debit as it has exceed the credit value, then you can say a surplus exists. Are you with me? I'm coming. Let me do. I don't know
It's a
what.
plus or a deficit.
I'm coming. I'm multitasking. I'm cooking and then. So I don't know if I've answered your. So if a country has a balance of trade deficit, so what you are saying is that they do more of import than export. But if the balance
Sorry,
of trade is
it's your last line for me, because you said the value of the value of debit. Was that what you said?
I
Of
said
everything.
in what we are saying now, I said the value of debit, the value of debit entry, it has exceeded that of the credit
Yes,
entry there.
yes.
So we can say that account is experiencing is on a deficit on the deficit side. What was the difference?
Yeah, I thought I had surplus. That's why I repeat it again. All right, it's fine.
So we'll still do the balance of payment. When balance of payment, when there is surplus, then that means export is more than import. That is, there is enough capital for domestic production. So I don't know if you can spare me 5 minutes. No, 5 minutes will be too much. Let us capture this one down for capital account, and we'll come back. You see, capital account, it
Rahmat, can
captures
we do it
every.
in the next class? My battery is
All right.
6%.
Okay. All right.
Sorry.
All right. Thank you so much for your time. I hope I've been able to impact us positively on this our BOP.
I'm
You've done
Rahmat.
well. Thank you.
Esther
Rahmat,
is saying something.
I
yes,
say
you
you've
were
done
trying to say
well.
something about after this calculation that we did, this arrangement that we did. You were trying to bring in balance of payments, like you were trying to explain something about balance of payment, because like I need to really know how it correlates to this credit and debit side. I think I missed a point there or something.
Okay. Please, can you explain? At least you've been saying that you understand. So please let me explain that part.
So I asked round
It's breaking.
what it connotes, the economic term of 150. That's basically what I said. And she also said that she mentioned two things. She said short run, that in a country, when we're looking at current accounts, we're also looking at short run and long run. And she said that if the export higher than imports in the short term is higher than imports. I think, Rama, did I get that your short run and long run very well?
And yes, what I'm saying is, when you how do I say it? You know, when export becomes more than your import, you know, at the short run, you know, yeah, the GDP will increase and all that. But you know, it will just be it will just be in the long run, you know, you'll just be too dependent on export driven growth. You know, you need to consider import too. But what I'm just saying here, in this kind of account, that we will understand is that okay, something actually take place. We can see the difference, that there is credit and I mean there's a deficit, and then there is a surplus. So BOP generally now, you know, how do I say it? A surplus will boost an economic growth in the short term. You know, by so doing, there will be enough savings. You know, they can even decide to lend from their excesses. You understand? But at the long run, they will have to depend on export driven growth. So, but in this kind of these entries, we are just showing credit, and we've seen the credit side, we've seen the debit side, and we can say from this, the current account is actually on the abi on a deficit side. I now said, for us to know current account, we also have to know all those things that makes up capital account. FPI is recorded under capital account. FDI is recorded under capital account. Which is lending, borrowing, it is recorded under capital. What I mean by FDI, FPI, you know, when we're talking about sales of assets, foreign direct investment, you know, it has to do with buying of that asset, maybe ready-made asset, or you build your own, or you understand. So it captures FDI, it captures FPI, it captures, you know, loan, it captures lending and borrowing. So if you have enough, if a country has enough, and if they are lending to another country, they're lending another country now, that those transactions will be recorded under the debit side. But if they are borrowing, if they are the one receiving, then it will be recorded at the credit side. If they buy, it will be recorded at the debit side. Then if there is sales of assets, it will be recorded on the debit on the credit side. So anything that has to do from the so he used external reserve, borrowing, and investment. Those are the three that he used in class. And that's why I said borrowing, it could be in form of long term, it could be in form of short term. Then the investment here now that captures the FPI can be in form of, you know, buying the assets or selling the assets. And the external reserve, sorry, please, 1 minute. I think I have to call it. My husband is giving us time and he hasn't eaten. He said I should take it inside and go and eat. Okay, so are we doing the capital account tonight?
No. No, since someone has gone, maybe you should.
Okay. All right. Hope I've tried. hope we were able to get something. Not that I've tried.
Yes.
Hope I've been able to pass that. Okay. Who said yes?
I, me, myself, Nkechi.
Okay, I me myself is saying thank you.
Mm-hmm.
All right, do have a wonderful
Thank you,
night.
Rahmat. God bless you.
Nice.
You're welcome. God bless you
Bye.
too. Good night.